Good morning and welcome back to Almus Market Mornings. Yesterday's markets seem to have one too many cups of coffee, with sudden moves and sharp reversals keeping traders on their toes. We witnessed significant volatility across asset classes, most notably in USD INR, which briefly slipped after opening to 89.75 before swiftly rebounding to the 90 mark. This rapid turnaround has added to the confusion around the RBI's intent and their intervention strategy. And a similar pattern played out in the commodities as well, where heavy profit taking dominated the early part of the session, followed by recovery in prices towards the end of the day. And on the Western side, Stephen Miran wants 150 points of cuts in 2026 because he believes that there are about a million Americans who don't have a job but could have jobs without causing unwanted inflation. Good morning, Jairam sir. What is your interpretation of the markets yesterday and your expectations before the all important NFP data tonight?
Good morning, Ishan. Um, Yesterday was a volatile day, no doubt, but not for the major dollar currencies. They were still in a range, slightly stronger dollar, no doubt. And the rupee moves were still well within the range of 89.70 and 90.25. As a downside, we have good bids from importers. On the upside, we have RBI offering dollars. So we are seeing some, sudden dips and blips, coming about because the market is not sure about the direction. But the major focus of the market currently is the threatened higher tariffs on India. Now, this threat is coming even as market had been expecting a trade deal to be concluded. So I think that's where the market's sentiment has once again turned quite negative. At the same time, there is apprehension that RBI could intervene once again, and possible we need some more time before the market can seek a direction, get a direction either on the upside or on the downside. The bias currently remains on the upside for the dollar at least. Lot of focus on US data. You had, following the ADP numbers on Wednesday. Yesterday we had the, uh, the uh, Challenger job cuts data, and also the weekly jobless claims number. The Challenger cuts were lower compared to last month. But overall, if you look at it in the year 2025, the cuts have been nearly 40 to 50% higher than the previous year. So there is definitely this is reconfirming that the job openings have been much lower. That is a weak job market, that has been confirmed by one more data. Jobless claims, of course, went up by about 8,000, from 2 lakh to 2 lakh 8,000, which is well within the recent ranges. The the positive side of the employment was also the labor productivity, which was improving, and this is mainly due to the AI-related, factor, and this could actually play uh, a double-edged sword. While the productivity will increase, the job market will also see lower and lower hiring. That is the expectation. Uh, Also, we had the trade data from US, where the deficit fell substantially, and with imports falling and exports rising, and this net exports rising, or rather the deficit coming down, will again add to the GDP number. So overall, yesterday we had also reported about the improved ISM services. Services account for about 70 to 80% of US business activity in GDP. So that plus the fall in the deficit actually will see a good improvement in the GDP number for Q4 that we will get at the end of this month. And this follows a 4.3% rise in GDP in the Q3. So overall, if you look at it, US economy is growing much better than other major economies. but one should also call it as a jobless recovery or jobless growth, because we don't see a rise in the employment or increase the employment, but it is stagnant overall, while the economy is improving on the other sectors, and the overall GDP is good, and US assets are also doing well. Now add to that the fact that due to the annexation of the Venezuelan oil resources, there will be economic gains for the economy as well. So all these things make the US economy still a more attractive place to invest, and so that's why the dollar also keeps gaining. The only question mark is about the interest rates, where they are headed. If the employment continues to be weak, whether that alone is enough for Fed to cut rates more, in spite of inflation remaining sticky. That is the biggest point. And also, market will be very keen to see what happens under the new regime after Powell's term ends in May. Of course, that is still some time away. In the meantime, we also have the World Economic Forum this month between 19th and 23, where even Trump is likely to attend in person. So a lot of policy statements or policy-oriented discussions will happen at this event. So that's something that the market would be looking forward to. Now, moving away from economics, I think a lot of focus on what's happening in the geopolitics. We had Marco Rubio, the Secretary of State, saying that Trump still has the option to address his objective to take over Greenland by military means. So that keeps the market on the edge. Now, meantime, Trump has proposed a 50% increase in the defense spending, almost up to 1.5 trillion. Now, if you look at the defense spending, it is already on the rise in most of the countries, including Europe. So that is something that we should keep note of. It will still have a worse impact on the fiscal as well. Also, a statement from Trump is notable. He is saying that it's up to Xi what China does in Taiwan, effectively giving, apparently giving a free hand what they do. So development on the Chinese Taiwan front needs to be, looked at also. In the meantime, there is, in the U.S. Senate, there was a vote which blocked President from taking further military action in Venezuela without Congress explicit approval. So market is observing all these developments keenly. There is no, of course, no positive development on the Ukraine-Russia front. In fact, that is gone out of the market's radar as well. Now, as you said, a lot of focus will be on the key jobs report today. And of course, that reliable official data on unemployment situation in the US is coming after a gap of 2 months because of the shutdown that we have had for 43 days. There's an expectation of new jobs at 60,000 added to the non-farm payrolls, and then unemployment rate rising to 4.6% from 4.5%. Not sure even a soft number how much it would weaken the dollar, because now market is convinced that it's a growth, but jobs are not created. There's no hiring. It's a no hire, no fire situation that's in the US. So that's kind of growth that we are getting. So investors will be very reluctant to sell the dollar much, even if we do get a softer number, because the overall economy is doing well and US assets are doing well. Now, apart from the jobs number, focus will be on a possible Supreme Court decision on the legality of Trump's sweeping global reciprocal tariffs. That could be struck down as per the indications, or rather as per the polls that have been conducted. So if they do, there is a possibility that the Trump administration invokes some other laws which will also enable them to impose the tariff. Of course, any such new provisions would require approval from the Congress, and it could be a long drawn process. If this happens, there could be a short term sell off in the dollar. Sorry. So that So this softness in the dollar can be somewhat short-lived again until they find out new ways to impose the tariffs. So these are the two things on the market's focus: the employment report and the Supreme Court decision, possibly due today. And then geopolitics will keep an very eye on the geopolitical developments as well. As far as India is concerned, the rupee will continue to range trade with FI flows remaining negative, almost 1 billion negative already in the new year, following negative 2025, and also the stock markets looking quite weak on a relative basis. Thank you.
Thank you, Jairam sir. And just to summarize, a stronger dollar was seen for sure, but the currency seemed to be in a range, and it's still ranging upwards as the FI outflows continue to be negative in 2026, and the RBI is still supplying dollars at the 90 level. And the threat of higher tariffs on India was posed yesterday, and thus the sentiment turns to be negative again. So we have to see how the RBI reacts to this situation. When it comes to the US economy, the job openings can be confirmed that it has been lower, as the US data we have received yesterday with respect to the jobless claims, which went up by 8,000 yesterday. And even though with an overall status, the US economy continues to do well, we can call this a jobless growth as the employment situation is not in a very good state right now. And it puts a question mark on whether the Fed will cut rates in the January meeting. And of course, the all important NFP data tonight with a softer number can really influence this decision. And the markets stay on edge as the global uncertainties continue to increase, as Trump increases his defense budget by almost 50%. And this is directly related to the situation in Greenland with respect to him using the military power. And contradicting this statement, there was a US Senate vote yesterday which blocked Trump for any further military action in Venezuela with respect to the whole situation of capturing Maduro. That's all we have today, and we'll catch up on Monday with a fresh round of updates. Have a great weekend.